On Sunday, the European Central Bank will reveal the results of its health checks of the European banking system. The exercise is aimed at ensuring European lenders have enough capital to resume lending to companies and businesses and foster the eurozone ailing recovery. It will also test the credibility of the ECB as it prepares to acquire new powers over the supervision of Europe's largest banks. Discussing this with me today is Nicolas Véron, Senior Fellow at Bruegel and at the Peterson Institute. So, all eyes on the ECB on Sunday. People are obsessing about a number, but is there more they should look for in the announcement?
I think obviously it will be interesting to look at the aggregate numbers and the aggregate capital shortfalls that the ECB will have identified in the eurozone financial system, and also the provisions that the ECB will impose on banks, so aggregate so-called Pillar 2 provisions that the ECB will impose on banks, which are almost like accounting restatements. That basically means the ECB wasn't happy with valuations and accounting in the bank's balance sheet. But I think it's probably going to be even more interesting to look at individual banks, so not the aggregates, but the bank-specific data, and look at what banks have problems, which sort of problems have been uncovered. And this is where the real story is, I think, more in killing the zombies than increasing the aggregate level of capitalization.
And of course, it's a credibility test for the ECB, an important one. How do you think the central bank has run this test so far?
Well, obviously, we have a much more robust process with many more checks and verification points than we had in the stress test of 2010-2011. In spite of the good efforts of the European Banking Authority at the time, the credibility was essentially destroyed when, after a few months, we had problems in the likes of Bankia or the Irish banks in 2010, and so on. So, for the same reason, we won't know if this test is really robust until sometime after the results have been published, because we have to see how the consequences play out. But more importantly, we have to see that there are no surprises that would destroy the credibility of this assessment. And this will take some time. But I'm confident it will be better than last time. It remains to be seen how robust and how uncompromising the ECB has been. And I think we'll know much more about this on Sunday.
And finally, this is only a first step in a way, because then the ECB will acquire this new power as the single supervisor. How do you judge the framework which is in place? And do you think Europe has done enough to provide itself with a functioning banking union?
Well, obviously the banking union is incomplete. There is no federal deposit insurance. The resolution framework is a hybrid between national and European. But in terms of supervision, it is actually very robust. The ECB is in charge. The regulation gives it basically unlimited power as a supervisor over certainly those banks that it supervises directly, which are the largest banks. And so I expect we'll see a number of consequences of this. The ECB will do its best to remove all the ring fencing of capital and liquidity along national lines that we have seen. It will encourage cross-border M&A, which could be very transformational. It will reduce the home bias in sovereign debt portfolios held by banks. So I think we'll see a number of consequences playing out, say, in the 12, 18 months following this transfer of authority.
Nicolas Véron, thank you very much for being with us. So, sweeping new powers for the ECB, let's see if it can use them wisely.